Hi, this is Chris Buss with Traders Profit Compass with your midday market pulse update for Friday, November 6th. Okay, guys, let's dive right into it. Today's a perfect example of, on the top line, we're flat at the moment. Someone could look at that and say, dead day, nothing's happened. But if you've been in front of the trade station, you know quite a bit has happened this morning. Not readily apparent here on the 2-hour chart, but we did take a dip down, a look into the gap, which was recovered, and now we've reclaimed this 349.50 area, and we're just oscillating here just above support. When we drill down into the 30-minute chart, you can see that we had a quick rug pull from 350 area down to 348, where support was found, and then that was recovered. We had talked about in the pre-market that there may be a fast move down towards the pre-market lows. Now on SPY, we did not make the pre-market lows, which were down towards, I believe, 346, if I'm not mistaken. But when we moved to Qs, we did get that move, and this was a fantastic trade. You got the pre-market low was 290, and then they rallied it up right before the open up towards the 293, 294 area. I don't know exactly where it opened. Let's see here. Opened 293.60. And then when price broke this 293, there was a perfect opportunity for a short entry, and you got that flush all the way down to the pre-market low. That was a fast $4 trade, and that set you up for a good day if you caught it. And if you were nimble, there was an opportunity to reverse that and then get $4 back going the other way. So net, nothing has happened. But if you're sharp on the draw, we're ready for anything on that open with a pre-market heads up about that pre-market low. Hopefully you captured this. And even if you didn't get the reversal, I mean, four is better than none, and 8 is better than 4. So, I mean, that's what active trading is all about. Now that we're, up here, we've recaptured these levels and we're back up to the opening price. It's all about how they close it today. I had been thinking that, after 4 straight days of being up 1%, that we would be flat to down. And so now we're flat. The danger with, having these ideas, of course, is that you lock into a narrative and you're not open to, a potential run higher into the close. But if you trade level to level and you stay fluid and flexible, you can, rebuy or reinitiate a long on a break and a recapture of this 293, and now that has produced a $1 advance from your buy. So regardless of what you think may happen, or what narrative either I say or you come up with yourself, just remember, fluid and flexible, level to level. And when you got, regardless of what you may have thought pre-market, when you saw the break of 293, and then certainly the break of the gap, that was a clue to get long, or excuse me, a clue to get short. And we had this pre-identified level at 289.50, and that is where support was found. So the elements were there. is what I'm trying to say. And if you didn't catch that move, jot some notes down in your trade journal of, recapping while it's fresh in your mind. What were you thinking? Were you open to that move? If you saw it, did you not believe it and you hesitated and then you thought you were chasing it? All these things will come together, not necessarily on one particular trade, but what I found when working with, other traders is that tendencies will emerge about, your trade entries and trade exits and trading psychology. And after if you're diligent taking notes, especially on the trades that you mess up on your execution, those trends and tendencies will emerge over time, and that will give you areas to work on going forward and things to be on guard about as you face trades down the road. And that's how you improve. If you just are frustrated because you missed it and never write anything down, that limits your ability to improve over time. So I really encourage you to make notes, especially about the trades you're disappointed in. We don't learn much from our winners. It's mostly the losers that inform us of how we can improve. IWM has been trading down most of the day and is wrestling with this support at 164. If we go down to the 30-minute chart, you can see that we're right on this uptrend channel support. If you're long IWM, you really do not want to see this channel give way, because then you've got more or less a pretty open path down to 162, and you're not going to want to hang out and just watch that $2 evaporate and then have the potential of this gap filling and going all the way back to 160. So if you're long and you've been tactically trading this, if there's a break below this afternoon, I would just exit and pick it up next week, especially if there's a marked move this afternoon. Just take it off and then regroup down at these lower levels. And as we've said before, as long as it holds 160, the uptrend will be intact. If it loses 160, then it would favor, coming back down in here into the weeds, and that whole value trade will have disappointed once again. Quick run through the FAAMGs. We had talked about yesterday this being an objective short against the highs when 3 or 4 candles were not able to get through. If you had carried that overnight, you got a move down to again retest that prior high back here, I guess, which was from, what was that? The 5th, Wednesday, I guess. So this is Wednesday, Thursday, Friday. So yeah, that was Wednesday's high. We had a back test here, and then we had a back test here. So you got that move, and now it's bouncing. But notice, trend line break on RSI, high level bear cross on PPO, and a lower high here on this, what looks like a fib bounce to me. That looks like a 50% bounce. I would not be surprised if this showed some weakness this afternoon, just based on this chart pattern. Apple, you got this move here this break of 118 gave you a nice short entry, and you got a quick $2 move out of that. It reversed and reclaimed and is now back up to the opening price. So if you were nimble and you were focused on Apple, you had a quick trade there. And on the recapture, if you wanted to be long, you could have bought back in at 118 if you didn't catch the reversal down here. And I was a little surprised that this just did not go ahead and fill that gap. A little unusual. I mean, you had some support here, but usually when you get an impulsive move like that into a gap, it'll go ahead and fill, but did not do that this time, obviously. Tesla, pretty much like Apple in the respect that you got a break of 430, but it did not go down to 420 support. It reversed midway and now is wrestling with that 430 line, where above we've been calling generally bullish and below 430 generally bearish, favoring a move back down to 420. And that may still pan out the rest of the day, and we're only halfway through, so we've got 3 hours to the close. This may in fact come down to 430 to close out the week. You just have to watch it. Trend line break, even though I don't have it marked in here, and a PPO high level bear cross tends to favor a down move at this point. Microsoft took the plunge, back tested the Wednesday high and reversed and then recaptured. So that was very much in line with the other stocks that we've already looked at. Amazon, a little bit different here. We had talked about this 285 as being not only a key level, but also the gap entry. And you got your $50 move and a little bit more. The momentum gave you a little overshoot here, and then it reversed and is back up near the open. So, you know, $100 of travel easily here between, you know, this level and then reversing back up. And I guess I think I misspoke here. I said that was a $50 move. It was obviously a $35 to $40 move now that I look at that, and then the reversal. So about $80 of travel. Google, I kind of have my line here in the way, but look at how the trading range that we had penciled in this morning acted so well as a level of support at 1740. Price came right down, gave anybody that was interested 3 hours, essentially, three chances to buy at 1740 if they wanted to be long. And we've gotten a little bit of a bounce back up to the midpoint of the range at 1760. So notice the validation of the line. We had a touch here, touch here, touch here, and 2 touches this morning. So we've had quite a few touches of 1740. So the more times you touch a level, the more important it becomes, and it, you know, that line has been validated quite well with 5 or 6 touches over the last couple of days. Netflix, this may have been a hard trade to take because you were in space. There wasn't really a level there, but came right back down, tested the gap from the other day, and then reversed and has moved up towards the opening level and is basically flat for the day, but not without a lot of price movement. Just a point to note here before I move on into some other names. We went through the FAANGs, we went through the indexes. I think in the pre-market, it's always really, really important, if you're an active trader and you're preparing yourself to take a trade, to focus in on the highest opportunity setups, potential setups that you have on the stocks that you normally trade. So for instance, if you're an Amazon trader, you have those levels dialed in. And if you're an index trader, you have those levels dialed in. And if you're an Apple, you get it, Facebook, Apple, whatever it is that you're trading. Because in that moment, it's going to be almost impossible to get them all. When that big bar hits, it's too much to ask to say, you could have got this one, you could have got that one. Get the one that you're focused on and be prepared to make that trade. And I think that focus makes all the difference, because regardless of whether you have 5 alarms go off, within 30 seconds of one another, that's not enough time to take them all. You've got to take the one that you're focused on. And if you don't get the trade because it doesn't fire and another one does, maybe you can't get in. But focus on the ones that you think are the highest probability trades and the one you're most comfortable in trading. That way, you'll have a higher probability of catching one. And one is all you need when you get a $4 move or a $40 move in Amazon or a $3 move in Apple. You get the point. That's much better than sitting there saying you could have gotten 5 trades. Set your alarms, dial in your focus, and be ready to take one. And if you're good enough to take 2, more power to you. Congratulations. But get the one. Get the one you're most interested in. And that'll set you up for a good start to the day. Solar reached up to the top of our box and has since been rejected. So we've got a well-defined trading range here between 77.5 and 67.5. I want to be a buyer on any breakout in this strong sector. If we get a pullback, all the better, but the sector remains very strong. Speaking of strong sectors, we had gotten long MJ, the marijuana ETF. We've gotten a big move today. Some incredible moves on individual names. I've been seeing some strong order flow in names like Tilray, Aurora, Afria. Those are all specific names that are, in the sector. And if you've been trading that sector, you're familiar with those names. We're in the ETF and have gotten a nice move on our 12 calls that we got yesterday. We're sitting on a double. But notice the technical action. This is why I'm showing it. Look at the perfect touch at the prior high. I mean, that's technical analysis in action. We want to see a break above this 14 75 area, and then that'll open up the door to a move towards 15.5, 16, and then hopefully up to the $18 to $20 range. But big impulsive move, taking out the 200, up at key resistance. This one looks really good. Snap. We took a position in this morning. Big bull flag. Several week or so of consolidation now beginning to emerge. Lot of institutional call buying in the name today, and I've penciled in a measured move. You know, bull flags fly at half staff. Here's the impulsive move, here's the flag, and here's the measured move up towards 56, 58 in that area. Big potential upside. I like this setup if the the market remains strong. If we can hold this break above 44, that would be great. We've got the 8-day acting as support on the way up. Hopefully we can hold that 8-day on any pullback. We got long YETI yesterday and actually rolled up from our initial buy in the morning and rolled up to December 60 calls, and we're just consolidating here after the big move. Keysight building on its breakout. So on this weekly candle, unless everything goes to hell in a handbasket this afternoon, we are going to get a weekly breakout confirmation close on this weekly candle, and I think then you can be confidently long above 110. And as we discussed yesterday, you could buy some 115 calls for November, and that would give you 2 weeks for a pre-earnings run. Earnings are November 18th. I would close that out before earnings, or if you're a daredevil, you can hold through it if you want. Others may want to wait until that earnings clears and then pick it up from there. But I think given this technical structure and a year's worth of consolidation below 110, I think this is primed for a move to 150 in that area. Doesn't necessarily mean it's going to be in a straight line, but there's a lot of coiled energy here, and I really like this setup. So let's wrap it up there. It's 1:17 as I'm wrapping up the video. Let's see how we close this thing this week, guys. Be prepared for anything in those final 2 hours. The great Peter Brandt, market wizard trader, says that the weekly close is the most important bar of the week. And reason being is you find out who really wants to be long over the weekend. And after, this big push this week after the election, with the VIX coming off like we had anticipated, and this relief rally has extended, who wants to take profits and who wants to stay long? So this final 2 hours couldn't be more important as far as risk sentiment and a setup for next week. So let's watch it closely. If you're new to the channel and you like what you've heard, please subscribe and hit the alarm bell. Leave a comment for me. I'd like to get some more user engagement on the comments. What do you want to see? what can I draw up for you? What can I present that would help you, whether it be an individual stock or a sector? I'd love to do that work for you and put it together in a video and present it to you and the rest of the team on whatever you're interested in. So please let me know. I can't do it unless I know what your thoughts are, so I appreciate hearing that. Also, check over in the show notes. You'll see convenient links to the blog site and to register for my content. We've got a nice community going in the trading room. We get a few more people every day or so. It's great to have that community growing. A lot of good, hardworking traders in there, and we'd love to have you join us. So, if I don't talk to you by the end of the day, have a great weekend. Look forward to the Weekend Profit Navigator over the weekend, where I'll do more of a deep dive on broader markets and also some asset classes we haven't covered in a while. So look forward to that over the weekend. So have a nice weekend, and I'll talk to you next time.